How's it going? Welcome back, it's Jonathan, and in this video we're going to be taking a look at the Bitcoin price. Now if you're unaware already, Bitcoin has risen around 5 to 7% overnight. Now that has created a form of a parabolic move, which is giving me an idea that perhaps the market is about to reverse. And I'm going to go through two forms of analysis for you today, just to go over this, just so you can get an idea of what I'm looking at. And then we're going to take a look at what's potentially on the cards next. Now, if you haven't already, go ahead and hit that subscribe button, share it with your friends, post it on some Facebook groups. The reason for that is because when you do that, it actually helps YouTube push this video up further and gets into the hands of more people. Now, obviously, I try to keep these groups tight because we have a very specific motive when it comes to cryptocurrency market, and that's obviously looking into the future to see where price can go. But if you feel like this information may benefit some people you know, hit the subscribe button and then share it with them. That would definitely help this channel out. So let's go ahead and take a look at the chart, and you can actually see that this blue line here is what we were looking at yesterday, and that was the potential first halting point for Bitcoin around the 54,000 mark that I was anticipating, just because I didn't think that there was going to be such a strong run that we actually got. But what we got instead was we got a massive push forward, and it went ahead and it hit our 220-degree line. Now the reason why I think that a top may be in soon is because these parabolic moves, they generally don't happen without some sort of retracement. And not only are we getting a parabolic move, but we've also got a parabolic move into a degree. In this instance, it's 220 degrees. Now, if you haven't been following us, I won't go into the explanation of how these are calculated, just to keep it simple today. But the green lines are where we call a 220-degree angle, and the blue lines are where we look for 45-degree angles. So that's where price is moved 45 degrees or 220 degrees in motion. Now, if you're unfamiliar with the degree form of analysis, it's a little bit complicated to simplify it for you in today's video, because that's not the intention here. But just keep in mind that the degree angles have given us very strong indications of support and resistance for the market, for Bitcoin in the future, before the data had actually even been presented. So for example, we started watching the degree angles, I believe it was around here. I started publishing them to you, and we can definitely see that over time these degree angles have provided levels of congestion or support and resistance in the market. Now, of course, you may start to see this pop up on other people's channels if they come across this one and then start republishing it. But not a lot of people know about this sort of analysis, and it's not something you can find in free trading programs like TradingView and things like that. So you definitely do have to be a subscriber to some premium software like Optima. That's where we find it. Anyway, so this parabolic move here is coming up and it's touching our 220-degree angle. And it's also moving into a time count that we're watching, which is between the 7th and 8th of October, okay? So the 7th and 8th of October is potentially going to be an area where the market may reverse, at least to the short term, at least for the short term, before it starts to go advancing higher. Now, when we look at price, we can see that the market moves up and down in what would appear to be a random nature. But when we see parabolic moves, they generally signal an end of a run, or at least the beginning of a run if the market is reversing. Now, from this move down here to this move up here, what we're looking at is, let me just get my price measure. We're looking at a percentage gain of 35% or 36%, and that's also a dollar value of $14,000. Now, if we look at other runs in the market, for example, this one down here to this one up here, we're looking at 13,000. We look at this one here to this one here, or we could even go up to here. That depends where you want to call tops and bottoms. We're looking at that between 13 to 15,000 mark. So for the market to move from here to here to anywhere around here, depending on how you want to do your form analysis, I would probably go up to this high up here, and then from down here to up here, we're looking at those 14 to 15,000 point runs. And what's happened each time after that, just on a standard aspect, is that the market has retraced, okay? The market has retraced, and now potentially, if my observation is going to be correct this time, we should be looking for the market to retrace. Now that's just two forms of analysis. We got our 220 degree, and then we got price ranges. Now price ranges are a form of price analysis, and anyone can do it. It's not that complicated. You look for repeat runs. So the market is going to always tell you what it's going to do in advance. And unless you're looking at the market from an objective point of view, you're always going to be using lagging indicators like moving averages, RSIs, and things like that. If you're looking at it from an objective point of view, you'll always go back and you go, how far did the market run between these moves? And what you'll start to see is that we have something called price and time over balance. Now, a lot of people were calling a dead cat bounce when this market rose up higher. They said dead cat bounce, it's done, it's dusted, and we're moving lower from here. As we can clearly see, the market did continue, so it stalled, it moved sideways, but the market did continue to move higher. Obviously, if we look at our cycles, we have our higher highs, and in this instance we had our lower low, so we're still technically in a sideways trend because there is no clear trend. There's no clear trend until we get the market pushed down and pull in a higher low. Okay, we need that market now to pull down, make a higher low, and then advance higher for that to be considered an actual uptrend. Until that happens, there is no clear trend with this move here. It's all the one move. So let's go back to it. So we're looking at 220 degree angles, 45 degree angles, so that's our squares, and then we're looking at price ranges. So given those two aspects, and then also our turn count, which is anticipated between the 7th and the 8th, so any time now, there could be a potential for the market to stall out before reversing. Now, if this is going to coincide, because the parabolic move was a lot higher than I anticipated, especially in the video that I did yesterday, I thought that the move would take at least 2 or 3 days to get up there. If that is going to be the top, then it could push the price down, and then we got to start understanding where price may meet resistance to the downside. So I'm going to go ahead and put on my 8ths. Now, I'm not going to go into too much detail on 8ths, but I will give you a quick overview as to why 8ths, let me just lock this, can't get it, why 8ths is an important number. So let's just say hypothetically that this is the top. Let's bring it out. So again, always spoke about 8ths. Some people like to keep this sort of form of research secret. I obviously don't talk about it a lot, just purely because it's not a form of analysis that is mainstream. Everyone goes for the 38.2, the 61.8, and the 50% levels. But the 8ths is effectively dividing a range into 8 parts. That's why it's called 8ths. But it's also what Gann would suggest as a major resistance level, given if we divide a circle up into 8 parts. So yesterday I mentioned that there was a 100% range. So if we take this top and this bottom, we can see that from top to bottom, that range is 100% or 360 degrees. Now, if we're using 360 degree philosophy, if we take a circle, and obviously we have 360 degrees or 0 degrees up top, and we go ahead and divide it up, well, we first of all divide it up into our quarters, and then you'll divide it up into your 8ths. Now, pretty simply, the quarters are going to be, so obviously your 25%, your 50%, 75, and then 100%. And then your quarters would then be dividing those, your 8ths would then be dividing those quarters again in half. So then you have to do 12.5 and so on. Now, the reason why this is important is because each of these moves around the circle is considered a 45 degree run. Now, you may be familiar with this 45 degree run because we're using degrees as this blue line here. So each of these blue lines on the square of 9 is a 45 degree run. So from here to here, it's 45 degrees in price. This is 45 degrees in price, 45 degrees in price. There are only 2 ways that you can ever assess a market, and that is through percentages and also degrees. Any other form of analysis is going to move you sideways. Okay, so the first form of resistance that we can see, if we were to try to combine our 8ths and also our degree levels, is a price cluster around here, a price cluster around here, and a price cluster around here. These, based on the top in the market right now, these levels here, so these 37.5% or 61.8% if you want to go Fibonacci, 62.5%, or again the Fibonacci level, and then obviously the 87.5%. Those 3 levels, I should say, are giving us a direct hit on our degree levels. Okay, so there is some form of harmonic in the market, where the market is suggesting that if it was to fall, if this was the top, I'm not saying it is going to be the top, we need to just wait for the trading day to play out, but if it is the top, then these levels are vibrating naturally to these degree levels. So that's just based on that theory. Now let's just say, for example, that the market does continue to run up and it does come up to hit this 45 degree angle. I think 45 degree angles are important for tops. Let's go ahead and move that up. Then that would give us a direct hit at this 50% level. This 25% level would be hitting here, and the 75% level would be hitting here, pretty much on par. And then we've also got the 87.5 on this 220. So again, you're probably wondering, what does all this mean? How do you use this all? But pretty much, I'm just trying to find out where the market may stop moving up, and then once it stops moving up, how far it may fall. Now, I do think that the next fall is probably going to be sharp and quick. It might just last 3, 4, 5 days, and then it's going to equilibrize. So the market's just going to sort of even out, and it's going to reverse sharply. If the market, so based on the being the 7th or the 10th at the moment, if the market is going to reverse today, hypothetically, that could put us into a sharp decline, which may last, hypothetically again, until perhaps the 12th. And if it moves past the 12th and the 15th, I think those two time counts are quite important to be watching. So at the moment, we're looking for a potential top around the 7th to 8th, just based on the parabolic move into a potential time count. And then if it does push beyond that, which does signal bullish market behavior. I've spoken about what happens when time counts don't succeed. For example, a time count here expired, the market just pushed straight through it, which is generally considered bullish. The next one is around the 12th to the 13th, and then the one after that is around the 15th of the month, which is kind of why I had my mid-month sort of target, because we're looking for a hit between the 12th to the 15th before a quick reversal. Again, it doesn't look like I'm going to be right in that mid-month suggestion. We might get a full mid-month term. We'll see what happens. Mid-month to me, I was dividing the month into 3, and I was looking for a term between the 10th to the 20th. Sort of that one of the thirds there. So yes, that's currently where we are. I'm not going to go into anything else, and the reason why I wanted to get this out today was because I also noticed that the current alternative crypto markets, so your alts, they weren't running with Bitcoin. So as Bitcoin ran up for this rally here, if you log into your portfolio, some of them are running. Most of them, like Ethereum and those big coins, they didn't run the same way, and that was potentially giving me an opportunity to come out and say that perhaps this market run in Bitcoin isn't the run that we're expecting, which is going to be the parabolic, we're going to the moon sort of run, and it could be just pushing us into a high before the market reverses. We'll see how that goes. I don't have anything else to say today, but we'll just see this play out, and we'll come back in a couple of days and just reassess the market and see where it's going from there. I still expect a mid-month term, and I keep saying mid-month. I do expect a low to occur around mid-month. Okay, so I am expecting the market to push back before we start to get our next rally higher into the stratosphere for Bitcoin. Anyway, if you find any of this information intriguing, insightful, something that you want to learn or progress on, hit the subscribe button, because I'm going to go into more detail on these as we get more free time. Obviously, I'm not going into the teaching aspect of the markets at the moment. That's primarily because we're running into a parabolic move in the Bitcoin space. And I think it's more important to give you an idea on what could be happening instead of what's already happened, so using the lagging indicators, and that way you can sort of see this play out as the market advances. Okay, so anyway, I'll leave that with you. Subscribe if you want to stick around, share it with your friends if you found anything useful, hit the like button and leave a comment. I'll talk to you soon.